Welcome. The reason we're talking today is the publication of a new, in-depth research report from Noble Capital Markets covering Nutriband Inc., ticker NTRB. Noble has initiated coverage with an Outperform rating and a $15 price target, which stands in stark contrast to the stock's current trading price. Today, we're going to break down the key arguments in that report and look at the public data that supports their thesis. Before we begin, please note that the following discussion is for informational purposes only and does not constitute investment advice. We will provide a full disclosure at the end of this episode. The entire bull case in the Noble Capital report is anchored to a single, pivotal event, a scheduled Type C meeting with the FDA on September 18, 2025. Noble identifies this not as a simple checkpoint, but as a critical de-risking event for Nutriband's lead product, AVERSA Fentanyl. To fully appreciate the significance of this, it's important to understand the specific problem Nutriband is solving. The opioid crisis is well known, but the abuse of transdermal fentanyl patches has unique vectors. These patches contain a large, potent dose of opioids intended for slow release. The primary method of abuse is not sophisticated extraction. It's simply putting the patch in the mouth to get a rapid, dangerous dose. To confirm this, data presented by Nutriband at the 2024 American Academy of Pain Medicine Conference showed that the oral route accounts for over 62% of all intentional fentanyl patch abuse. This is the precise market failure that AVERSA technology targets. This brings us to the technology itself. The Noble report highlights AVERSA as the core innovation. It's an abuse-deterrent platform that coats the patch with Biotech, the world's most bitter substance, making it intensely unpalatable. But it's more than just a simple coating. The technology features a patented immediate and extended release profile, making the aversive agent difficult to separate or scrape off. This creates a powerful deterrent. Now, a key question for any investor is the competitive landscape. While abuse-deterrent formulations for pills like OxyContin exist, they address different abuse methods like crushing or dissolving. Nutriband's public filings confirm they are not aware of any other abuse-deterrent transdermal products currently in development or on the market. This effectively positions AVERSA Fentanyl as a first-in-class solution, filling a significant and unaddressed gap in opioid safety. To protect this position, the company has built a strong intellectual property moat with patents for its technology granted in 46 countries. So what makes the FDA meeting so important? The Noble report explains that Nutriband is pursuing a streamlined 505(b)(2) regulatory pathway. This is possible because they aren't creating a new drug from scratch. In a key strategic move, Nutriband has partnered with the global manufacturing leader Kindeva Drug Delivery to apply the AVERSA technology to Kindeva's already FDA-approved fentanyl patch. A positive outcome from the FDA meeting would essentially validate this low-cost, accelerated path to market, requiring only a single Phase 1 human abuse study. The Noble report's $15 price target is built on the successful execution of this timeline. It models the company's value based on capturing a piece of a very significant market. To add color to that market size, the company's prospectus cites a third-party assessment from the healthcare consulting firm Health Advances, which projects peak annual U.S. sales for AVERSA Fentanyl could be between $80 and $200 million. Now, a crucial part of any biotech investment and a key strength highlighted in the Noble report is the company's ability to fund its operations. This is where Nutriband's business model is so unique. The report notes that the company uses revenue from its contract manufacturing division, Pocono Pharma, to offset development costs. We can confirm the success of this strategy by looking at Nutriband's latest 10Q filing. The numbers are compelling. For the first 6 months of 2025, revenue grew by over 50% year over year. The filing also shows a healthy cash balance of $6.9 million as of July 31st, reinforced by a recent $5.3 million cash infusion from warrant exercises. Beyond the balance sheet, management has demonstrated a strong commitment to shareholder value. In July 2025, the company announced a preferred stock dividend, which is convertible into common stock only upon the FDA approval of AVERSA Fentanyl. This is a powerful move that directly aligns the interests of the company's insiders and its shareholders with the single most important regulatory milestone. This track record of execution extends beyond financials. Over the last year, Nutriband has consistently delivered on its stated goals, from securing a new U.S. patent for its technology to being added to the Russell Microcap Index, increasing its visibility to institutional investors. This consistent progress builds confidence in the management team's ability to deliver on the plan that Noble's report outlines. So, to summarize the thesis from the new Noble Capital report, they see a company with a unique, first-in-class technology targeting a validated multi-million-dollar market. They've identified a key FDA meeting that could dramatically shorten the path to commercialization. And they see a resilient dual-revenue business model, a strong balance sheet, and a management team with a clear track record of execution and shareholder alignment. The report essentially argues that the market has not yet priced in a positive outcome for this catalyst. It presents a clear story where the stock's value could be significantly re-rated as the company continues to execute on its streamlined plan.
As a final reminder, the information in this presentation was prepared by the investor relations firm JP Capital. In the interest of full disclosure, this is a compensated presentation. JP Capital has been retained by Nutriband for investor awareness services, for which it receives a cash and stock option compensation. Please note, JP Capital is not a broker-dealer or a registered investment advisor. This content should not be considered independent analysis or advice designed to meet your specific investment needs. Furthermore, associates and employees of JP Capital may trade securities of the company. We strongly encourage you to conduct your own independent research and consult with the licensed financial professional before making any investment decision. For our full, detailed disclosures and disclaimers, please visit jpcapital.finance.